What's going on? Alex here, and today I'm answering your tax questions from the YouTube comments. And today's question has to do with how do CPAs research complex tax situations and how do they handle situations in which they don't know what to do? Let's take a look. This is a great question because there's a lot of mystery with regard to where tax people get their information, right? Because many clients will call up and say, hey, is this deductible? And their CPA will say yes. And that's the extent of it. But the source of that information or how they came to that conclusion is usually completely unclear. So Lewis M. asks the following. What does the typical CPA do when they're not sure how to handle a certain tax matter? Are there good online resources when a CPA has a question? I thought this was extremely applicable because I could tell you that individuals in my profession, and I have to be honest here, some of them can work on their communication skills a little bit because when you tell a client, yes, it's taxable, not taxable, and you leave it at that, they're really not that much better off because they don't really understand why that's the case or why that's not the case, and they're going to have that same question moving forward. So I like to educate clients, give them a bit of perspective as to the reasoning behind whether something is deductible or not so that they can apply that knowledge moving forward and, quite honestly, not ask me the same question 4,000 times. But when it's unclear how to handle a certain tax matter, what do we rely on? What's actually happening behind the scenes? One common misconception is that we can pull up IRS publications as professionals. For example, Publication 17. It's a nice document. I like it. I'm a fan. The problem is that these publications are not authoritative whatsoever. So they hold no water with regard to taking a position on a tax matter. In other words, we as tax professionals cannot rely on any IRS publications. Those documents were specifically created for everyday taxpayers to look at and try to understand how to fill out their tax forms. It's not for us professionals to use because if we end up relying on publications and we end up at a tax court matter or in an audit and we pull up the IRS publication as our justification for taking a position with regard to income taxes, that might be the end of us, all right? So long story short, these publications that individuals are very familiar with are completely toxic for the most part to professionals because you can rely on information that's in a publication and still get yourself into trouble when the tax matter is viewed from the perspective of authoritative sources of tax law and guidance, which I'm going to describe now. So, with regard to what we can actually rely on, there's a good list here on the University of Minnesota Law School website, and it lists the sources that are authoritative, meaning we can rely on them in an income tax setting to make a decision and to interpret a certain tax matter for a client. And then there's non-authoritative sources that we cannot rely on in terms of making decisions and offering advice. In terms of authoritative guidance, this is where it does apply in terms of analyzing a tax matter. It starts with the statutes. And the other way to refer to that is the Internal Revenue Code. This is the language that Congress puts in place that becomes the tax law. And this is essentially the most authoritative source of tax law. And it is not an easy read. It's very authoritative, not easy to read. If you take a look at an example here, this is Title 26 of the U.S. Code, which is the Internal Revenue Code. And it has a few subtitles, chapters, what have you, but at the end of the day, we're looking at Internal Revenue Code 263, capital A or Cap A. And this has to do with capitalization of certain costs. I don't want to get into the technical aspects, but you could just take a look here and see that this is not easy reading. It's very technical. They don't hold your hand here. And for the everyday taxpayer to wade through this, I wouldn't expect that they would get very far. You have to handle this on a continuous basis to really get comfortable with a lot of the definitions, a lot of the references and so forth. Often certain code sections will reference other code sections and you need to understand those as well to get the meaning of the section that you're reviewing. Very technical, not an easy read. And sometimes in reading the tax code or reading the actual language of the law, we still don't have enough clarification to make a decision. So what happens then? So you read the Internal Revenue Code, you're still not sure how to treat a certain item. Where do you go? Now, fortunately, while Congress puts out the Internal Revenue Code, the Treasury puts out regulations, and that's actually mentioned on this website here. So we have the statutes, which is the Internal Revenue Code. We just took a look, and this is arguably the most authoritative source of tax law. Then you have the regulations. And by the way, I'm not an attorney, okay? I'm just a simple tax preparer. So don't take any of this as legal advice. Don't run to tax court with this video and use it as any sort of evidence. I'm just talking about what I, as a tax preparer, rely on to make decisions in terms of preparing taxes for my clients. I'm not practicing law. This is not legal advice. So in terms of the regulations, they're issued by the Treasury, whereas the code is issued by Congress. And the Treasury uses these regulations to explain a lot of what the code is meant to put in place in terms of the rules. So it'll have more verbose explanations. They'll generally give you more details with regard to what the intent of Congress was from the Treasury's perspective. And probably most important is they'll provide examples. All right, so they'll just say, hey, for example, if you have this situation with this going on, then this is the treatment. Or if you have this situation with that going on, that's the treatment. Extremely useful in terms of making sense of the code, because sometimes it doesn't get to enough detail. You may have a situation where the code describes very well what happens in scenario A, very well what happens in scenario C, but scenario B is a gray area, and the regulations may very well address that through one of the examples. And you can see, this goes on for a while. Some of these code sections are very long. But at the end of the day, you might look at IRC, or Internal Revenue Code 263 Cap A, and say, it's not very clear what they're getting at. Then you take a look at the regulations. So this is Title 26, CFR, Code of Federal Regulations. And you can see here that it's 1.263A. So when you see that 1 point, you're dealing with regulations, not the Internal Revenue Code. All right, so we have the code and the regs. We like to say in the biz. All right, so that's what is being referred to here in terms of the statutes. That's the Internal Revenue Code, and the regs, which are the regulations. And there are multiple regulations per each code section, so there isn't just one. So if we look at this area here, and thank God for Cornell Law School for allowing everybody to use this tool here in terms of publishing the code, because otherwise you have to pay a lot of money for all these research tools and all of that. But this does the job in many cases. So you can see here that IRC 263 actually has a bunch of regulations associated with it, and if you want clarification in any of these areas, the regulations are where you can go. So they're essentially step 2 in terms of the authoritative nature of the guidance that we have. So if you have the code in your favor, then you're looking good. But if you have the regulations in your favor, you're still looking very good in terms of taking a position, because that's what they're there to do. They're there to explain the code in more detail and provide a bit more color in terms of what the intent of Congress was, at least from the Treasury's perspective. On top of that, we have other materials that are put out by the Treasury, by the IRS, different areas within the government, and some of them are Treasury decisions. You have final and temporary tax regulations. These are authoritative. Then you have proposed regulations. They're not authoritative. You have revenue rulings, notices, private letter rulings, technical advice memoranda. You have general counsel memoranda, all this different stuff. Now, in terms of describing what's authoritative and what isn't, we can go on for hours on that. And again, this is not a legal class by any means, but it just gives you an idea that there's so much material that comes out of the Treasury, the IRS, the government in general, that you have to know what you can rely on and what you can't rely on so that you can make proper decisions in terms of advising your clients. On top of that, there's also what's known as the tax court. And essentially, when you have a dispute with the IRS, there's a few places you can go. Now, one of those is the circuit courts, and those courts essentially allow you to fight with the IRS. But the downside is you actually have to pay the tax that the IRS is assessing. Then you could fight with the IRS in terms of getting those amounts back. All right, so you sue them, you get the amounts back. That's generally how that works. But the tax court specifically is a way you can contest a tax liability without having to pay it first. So you can take your case to tax court. If you and the IRS can't get on the same page and they feel one way, you feel the other, you can battle it out in tax court. It's one of the places you can go. And again, the benefit is you're not shelling out money up front and then trying to recover it. Instead, you're going to tax court to fight it out. And the tax court will then determine if you owe those amounts or a different amount or nothing at all. There's times when the tax court agrees with the IRS and times when the tax court does not. So even though they're all part of the government, they do have disagreements. The benefit of these tax court cases is that we can use them, some of them, in terms of relying on them for precedent. And I don't want to get too technical as far as which cases you can and can't rely on, but the good thing is in terms of the tax court, you could just go on the tax court website and search the opinions. So we were looking at IRC or Internal Revenue Code 263 Cap A, has to do with capitalization. If we go on the tax court website, we can just search the word capitalize and hit search on there, and it's going to essentially look through all the tax court cases and find all the ones in which that word is used. And the benefit of tax court cases is that they're generally very good explanations of situations and matters that are not fully described in the code and in the regs. Believe it or not, there still could be some gray areas. And you can see here, it'll highlight different cases where the word capitalize happens to come up, and you can use Boolean search variables in here. So essentially you can put capitalize and inventory, something like that. So it's going to search for cases that have both the word capitalize and inventory in it, which allow you to take a look at some opinions that have been rendered from the tax court. So let's just take a look at this one. Gives you a nice PDF. I love this website. And you can see this is a TC memo, United States Tax Court, and it'll first start by stating the facts. And you'll have the basic information of whatever scenario is at play detailed for you, so you know exactly the facts and circumstances that are at play. Then you have a discussion of the rules that are applicable. So it'll have a section here where essentially the law that's applicable to this particular situation is going to be outlined. So you'll say, you know, code section this says this, code section this says this, code section that says this. And finally, you'll have a discussion of how that law applies to this particular situation. Finally, you'll have a conclusion. So the tax court is generally going to rule in favor of the petitioner, which is the person bringing the case, and the respondent is the other party. So those are the two parties. And you'll see the conclusion here, and you'll see that petitioners have met their burden of proof, so on and so forth. So essentially, the tax court is going to make a decision with regard to who they agree with, why, they're going to state their rationale. And this is a wonderful source of information for us as researchers of income taxes to find out if one of these situations is applicable to our clients. So if a client has a similar fact pattern and we have a tax court case that we can use as precedent, you can't rely on all of them as precedent. I don't want to get too crazy here. But if you have a tax court case that is reliable as precedent, then you're looking good in general in terms of taking a position. Of course, you want to do a lot more research, and if you have the code in your favor, the regs in your favor, and a solid tax court case, you're looking good. But in some situations, even going that far isn't going to take you all the way. So you have to use professional judgment. You have to step back and understand, well, what is the spirit of the law that was put in place? What are they trying to accomplish, and how does that relate to my client's situation, and how can I advise them accordingly? Then, as another layer, you might step back and say, well, what would I consider to be a conservative position in this respect, and what would I consider to be an aggressive position in this respect? And at the end of the day, as tax professionals, our job is not to make decisions on behalf of clients. Our job is to properly inform the clients of the pros and cons of making one decision over another and allowing them to make that decision, okay? So To address your question, in terms of where you look to research tax matters, well, you can start generally with the code. So the Internal Revenue Code is your friend. If that doesn't get you there, you can certainly take a look at the regs, and sometimes it's good to read them in conjunction just to make sure you're interpreting things correctly. Also, you can take a look at U.S. tax court cases. Very useful, very good explanations, because you get the fact pattern, you get the laws that are applicable, you get the section that describes how the laws impact that particular situation, and then boom, you get the decision at the end of each case. So very useful in that regard. And finally, you have to remember that there are many sources of tax guidance and tax law, but essentially you have to recognize what is authoritative, what you can rely on, and what you cannot rely on in terms of making decisions and advising your clients. Because at the end of the day, clients rely on you to sort through all this stuff, and a lot of them are not even aware that this happens in the background, that we're doing this much research to answer their quick question, right? We always get quick questions, and they always turn into 4-hour research assignments. Just make sure you bill for the time, please. All right. So that is essentially where we go. But my favorite source of research for tax matters, you ready for this? I don't know if you've heard of this. It's called Google. So let me explain. If you Google 3 or 4 or 5 words that are applicable to your situation, then it's a good likelihood that you may not find a particular tax court case right then and there at the very top of the page. You may not find a particular regulation that allows your client to do what they want to do, but you may find a discussion or an article that deals with your matter. And in that article, they have references. They'll have a little number next to a word, and then you can go down to the bottom of the page, see where they obtain that information, and those sources can guide you to a tax court case, to a district court case, even a Supreme Court case. And from there, you can start to build your research, and it's not so much the articles themselves that you're relying on, it's their sources that you want to go to, because don't rely on somebody else's interpretation when you can avoid it. You want to go to the source material, to the source document, because at the end of the day, when you're putting your name on a document that you give to your client, you better make sure that you have the underlying authoritative substantive support available so that you don't end up in a difficult situation. So with that said, hopefully this was helpful. If you're watching this video and you found it valuable, hit that like button, subscribe to the channel. All of that's free, I promise. And leave a comment below. If you leave an interesting comment, I just might answer it in a tax video, much like this one. With that said, hopefully this was helpful. Thanks for watching.